Okay, 10th of February, Rudy here. Welcome to the daily investment show where we go through ASX and US market sectors and commodity prices, looking for opportunities on where to deploy our cashola. So start off with the ASX, the XKO, ASX 300. So still capped by the dome here. Which is largely driven by the financial sector, the XFJ, the material sector. It's where you want to be at the moment in the materials sector. So we still got a nice projected flag distance up there, flagpole. If we compare the XMJ to the XKO, so we can see again the outperformance of the materials against the ASX 300. This sector I'm getting pretty bullish about, the XCJ, which is the energy sector. Lovely rounded bottom there. We're still sitting at resistance, but we've got another lovely rounding bottom there. Well, that's a reverse head and shoulders, shoulder, head, shoulder. If we compare it to the materials, maybe if you divide by, ready? So it hasn't broken out yet, but that looks pretty bullish. If we, I'll just hear them rather than type them in. It's easier, but you get the gist. So this is the XCJ over the XFJ. So the energy sector over the financial sector. The sector pays higher dividends than the banks, and a lot of capital growth to go there. Our gold index, XGD. Nice time to be accumulating some gold stocks and ETFs. If you want specific shares, ETFs on the ASX US, join the channel, $10 a month. As one of the subscribers said, it's a cup of coffee and a sandwich. I thought that was a nice one. If we compare the gold index to the materials index, so gold still is the materials of the day. Our tech sector, so we're trying to so that was a sell back here. There's that rounded dome. So it's trying to find a bottom. There's a couple of players in the individual shares worth having a look at. This is a new one. I haven't shown this even to subscribers. So we've got the technology. So the technology index over the materials index. So obviously materials is where you want to be, but it's interesting. We've hit a bit of a bottom here. No, I'm not going to sell materials and buy tech, but I think it just shows the relativity. All right, so America. So the S&P 500 is just stuck in a range here. There's a whole lot of options that are ready to sell on a break there, and a whole lot of options ready to buy on a break there. So whenever that happens, it's probably just going to trade in a range because people make money by them not being exercised, the big boys, that is. The NASDAQ, so same. So our materials index over the S&P 500. So we still want to be in that space rather than America. The XLK, the technology sector in America. Bit of a rounded dome going on there. The semiconductor sector, part of the tech, still looks okay. And this is the ratio of semiconductors over the tech. So whatever that's going up, then that's positive for the tech sector. But we are getting close to a target move there. And again, just my biasness to the energy over tech. This is in America. So we can see it's already started. Energy's been outperforming the tech sector, and declining channels. Very bullish. They have to break first, but that's looking like it is. Your super fund. This is your typical high growth fund, a little pet project of mine I've got with subscribing members to get out of a ticker box and build your own portfolio, and you can do it in Australian Super, Host Plus. You don't have to have SMSF. So if we look at the materials sector over your super fund, so a portfolio tilted towards materials would have outperformed. This is the current model portfolio that we've got running. So it's a nice buy opportunity. Your VGS, the old favourite, the old VAS VGS combo. So the material sector over VGS. So again, a bias to materials over VGS would do you well. This is the current ETF model portfolio, doing okay. Okay, the US dollar. So a bit of talk about China saying they're going to sell down their US treasuries. So to add a bit of a break of this candle here would be extremely bearish. But it hasn't, well, it doesn't look bullish, that's for sure. Aussie 1 year rates up. It's pretty high. Now this one here, so Japanese bond yields. This is 10-year bond yields. So you've got a bit of that yen carry trade unwinding at the moment, because people used to, borrow in Japan for nothing and invest in the US. But there's also a relationship between Japan rates and gold. So we can see here, so this is Japanese interest rates, and the blue line's the gold price. So you can see when Japanese interest rates started breaking out, the gold price started breaking out too. So it's all sort of to do with, just debt and financial instruments and people being smart, and gold being something that you can't default on, basically. Aussie dollar, we're just knocking. Well, I guess, yeah, it's a bit like that, the USD. So again, biasness to a breakout. So the gold price, go to a daily chart because that weekly's a bit. So that looks fine. I mean, you've got it could trade in a range. It would probably be healthy, actually, to just trade in a range and build another base, but it does not look bearish at all. Same with our Aussie dollar gold. It looks fine. And all this, from a gold miner's perspective, this is good because once it makes a new sort of bottom, because it's hard to buy a gold miner when prices are doing this because you don't know what to value them at. But now that gold's done this and should put a floor in, then analysts can start saying, okay, we'll value these guys at $7,000 an ounce instead of 6,000 or whatever they're doing. So Bitcoin, it's waiting for direction. So it probably needs to have another retest and see if that low gets taken out or not. So gold over Bitcoin. So I think I'd rather know where I'd rather be. Silver. Oh yeah, this is so this ETF. Well, there's a new one on the ASX that tracks the silver miners. This is one we're getting into. I've got a special projection day today. Okay, so a bit like gold, that's fine. It's had its A, B, C correction. So again, just consolidation here would be nice. I was going to say the long term. So like the short term projection was $90 based on the depth of this candle. But if we take it, this is a logarithmic chart. So it's not based on units, but it's based on percentage move. So if we take this depth, this percentage move depth, and add it, so you can see the same length there, gives us a target price of $250. So that's eye on the price stuff, that one. So that was just a bit of fun, but you got to have targets. So silver in Chinese, so Chinese silver price converted to dollars is at 90. So the spread's at $8, so you're paying more over in China. Gold silver ratio. So the gold had its peak. I do expect silver will outperform copper. So again, they're all having this. That's fine. It's best for the miners now. So they're going good. Oil. Oh yeah, got. So if you know what I meant, so we got this is an ASX oil-based ETF that we're into, and this is my favourite US one at the moment. Look at that, all the way to go. So $10 a month. Giddy up. Okay, so the oil price just looks very, very nice there. We just got a really, really big base, and everyone hates it, so that's good. Iron ore is on support. Lithium, we're sort of getting out of, well, we have put cells on a number of lithium. They've run a bit hard. Uranium, spot uranium. So the uranium miners are good buys now. They got walloped, forming a base now. Thermal coal. So that looks like it's about to break out. Met coal, coking coal, so that already has broken out. Nickel. So nickel's had the pullback. Looks like it's finding a base. So there's a number of nickel plays in there. And bauxite, aluminium bauxite. So that's breaking out. So I think you can see where the trends are. They're in resources. All right, have a good one. I'll do it again tomorrow. Otherwise, yeah, join the channel. $10 a month. See ya.